Hi, everybody. Welcome to our home buyer workshop. We have this home buyer workshop every week to provide free educational information in all the processes of buying a home. So today we have Gustavo Segura with us, and he's with Sendero Home Loans. How are you doing today, Gustavo?
Doing well. Thank you for having me, Patricia.
Great. So you've been on our call every week, and we have been shifting on the topics. We've been talking about closing costs. We've been talking a little bit about FHA loans. We were talking about FHA loans last week and what some of the requirements are for that. And so this week, we wanted to talk about the rates and just see what buyers are doing in today's market, because they're still buying homes. Buyers are still purchasing homes and getting into escrow every day. And if at the end of the day, if you need a place to live, you need to basically just prepare to purchase a home and see what's going to work for you and your family as far as your budget is concerned. So let's take a look at today's rates. And this is, all right. Can you see my screen, Gustavo?
Yep, I can see it.
Okay. So for everybody watching, today's rates are at 7.05. This is for a 30-year fixed mortgage. And as you can see, the interest rates have been shifting. Thursday, October 6th, we were at 7.04. And today, October 12th, we're at 7.05. So going back through 2017, you can see here how the interest rates have been fluctuating. Look at January of 2021, we were at 2.9. That's amazing.
It is. It really is. Yeah.
So now, obviously, rates are where they're at 7.05. And I know you're in the lending business and you deal with clients every day as far as their qualifications, what's needed to get pre-qualified for a loan so that they can make a strong offer and be in that position. What are you basically working with your clients on today to combat these high interest rates?
Yeah. So, you mentioned about that people are still buying homes, right? So it's either you're gonna buy or you're gonna rent. And that option on the renting side is going higher and higher as well. So people are getting pushed one way or another. They have to. It's not an easy decision. Before, when it was rent was cheaper, it was easier. It's like, hey, I'm out of the home buying game.
Right.
But right now that makes it really hard. And now we have the interest rates, right? So what I'm talking to buyers is about being able to use a short-term buy down. And that's working maybe with a as well, so if a seller has got their house in the market and it's going for 30, 60 days in the market, instead of having a big price reduction of 50,000, 75,000, it's going to be more effective if they work together and they can get maybe 15,000, 20,000 in seller concessions, where the buyer can use that to do a short-term buy down. Now, there's two different kinds of buy downs in order to help the buyer with their payment and their rate. You can buy down the rate using points, right? You pay a point or 2 points, and that's going to take you, let's say, from a 7 to a 6% over the life of the loan. That's a permanent buy down.
Right.
Or
So
you can, yeah.
let me just ask you a quick question. So by paying 1%, that buys down your rate by how much? 0.5%?
No, probably a little bit less than that. It's probably going to be, 3/8, maybe a quarter. So, that's something that we'll take a look at, and we'll see how much it will bring it down. But that could get costly. So it's one of those things where you want to use that money that you're getting from the seller and make it as efficient as possible for you. So if you're going to be buying down that rate for the duration of the loan, that's because you're planning on staying there and not touching your loan for a while. You're not going to refinance, you're not going to sell a house for 5, 6 years, 7 years, and that may make sense. We also have short-term buy downs where you can take that $15,000, $20,000 and basically put it all into the first 2 years of your loan. That way, if you got a 7%, this I know that we can drop it by 2% the first year. So then it goes, instead of 7% payment, you're going to be doing a 5% payment. for the
Well,
first 12 months.
that's a big difference, right? I mean,
That's
how
a
much
big difference,
money
right?
can somebody save by dropping their interest rate to 5%? A couple
Oh,
hundred
that could
dollars,
be like
right?
$1,000.
Yeah,
Yeah, no, that could be like $1,000. Yeah, a month. So, that's in 1 year, so that's $12,000. And then the next year, the second year, it gets dropped by one. So instead of seven, it goes to six. And that could be another $500 or so that you're saving that second year times 12, right? So that's where that 18 to $20,000 seller concession is all used instead of buying it for the duration of the loan period. So that could really help you so that they can get into that payment easily into the first 2 years. And by the time they have to pay the full payment the third year, they
mm,
probably already may have the option to refinance. The rates come down, they can refinance instead of a seven, they get, a 5.5 or six, and they used up all their sessions. So that's a great benefit.
right. And
Yeah.
I know rates are probably going to go up again. And we're not going to see a reduction, I would say, in the very near future. So it really depends on what the buyer's goals are and what
Yeah.
their intent is once they purchase the home. So if you've been in a rental situation for, let's say 5 to 10 years, and you've made that decision that now you're ready to buy a home and basically plant your roots there and stay in that community for more than 5 to 10 years, then it would make sense to do the buy down, right?
Yeah, exactly. And like you said, if you're paying rent and you're paying $3,000 and you've been paying that for 5 years or 6 years, that money has just been going to waste, right? So at least now you buy, you pay that money, you get some tax benefits as well from owning your home. So there's a lot of benefits that come with being a home ownership that we shouldn't forget about. Even here in Orange County, from last year to this year, we still had about an 8% appreciation on single family homes. So each
Right.
year, yes, that 8% wasn't a 30% like it was during pandemic time, but each year we're getting something, right? There's a return on that investment.
Absolutely.
And when you're renting, you don't have that. Rent just gets higher and then your money actually loses value there.
Right. And like you said, every month you're paying somebody else's mortgage instead of your own. And,
Yeah.
who wouldn't want to leave some kind of financial, stability for their family or their kids, right?
Yeah.
Well,
Yeah.
that was my incentive when I bought my home was, I only had one child, and I wanted to leave her with something because when I go, I'm not taking the house with me. So,
Yeah, no, it's true. And I always tell people too is it's very hard to get the perfect situation that everybody's looking for. A low price
exactly.
home, a low rate and location, right? So what happens? A lot of times you settle for a home, because maybe it was like the one that was closest to what you wanted. Well, this is kind of one of those scenarios that on the rate side, yes, you would like a lower rate, but you kind of settle a little bit for that higher payment because you know that you can get the home that you want because there's less competition right now, or because you've got a little bit of a seller concession. So you got a little bit of a benefit by working with the buyers now, so a little bit more of negotiation on your side. So it's hard to get those three benefits all together.
Right.
So somewhere it's got to give. So, but you can always refinance. You can always, take a look at that as an option as well down the line.
Right. And that's what we've been saying, right? You're marrying the home and you're dating the rate. So in the
Exactly.
future, you have the option to refinance once the rates do come down because eventually they will. I mean, we all know
Yeah.
that real estate is a cyclical market and so are the rates and they fluctuate. So eventually they are going to come down, but at least for now, you're able to buy a home and get situated there and your home will continue to appreciate once you become the new owner and just live in the home. I know my home now is worth almost double what I purchased it for almost 7 years ago.
Yeah.
And
Exactly. And it's a great
I,
investment.
yeah, and I think it's just also knowing what your absolute must-haves are and
Mhm.
what the deal breakers are, right? Because like you
Yeah.
said, not every home is going to check off 100% of the boxes. But if you have more than half checked off, I think you're doing pretty good. You know, when I
Yeah.
when I bought my home here in Downey, I knew I was going to have to commute to downtown and also to take my daughter to school for the first 2 years. But after the first 2 years, once she graduated high school, I didn't that eliminated an extra route, an extra trip that I had to take. So that's why I knew the first 2 years were going to be pretty tough on the commute and the time I was spending in my car every day. But after those 2 years flew by so quickly, you know, I didn't have that
Yeah.
commute anymore. So it made sense for me to move out here and live in this area. So it's just kind of managing those expectations and really looking at what are the actual, you know, what are your goals, long term and short term.
Yeah, exactly. And it's very much the same way on the lending side. You want to make sure that, of course, you qualify for the loan. The lenders want to make sure you qualify. Right now, we have some of the stricter guidelines. So this is not 2008. You know, this is not where we have defaults happening left and right.
Right.
Defaults and foreclosures and all that. That's historically low at the moment. So we have strong guidelines. People that are buying because they can, even at these rates. So, you know, next year and a half, 2 years maybe, if they need to refinance, they can do that. They get a lower payment, got appreciation on their side as well during that time. They got some tax benefits, and now they get a lower rate because you know, we went through a different market. So once you're in that scenario, it opens up a lot more doors in order to benefit from your home ownership.
Absolutely. And I wanted to just touch base really quick. I think we'll be wrapping it up right now, but I wanted to touch base on some of the costs that buyers incur when they're applying with a major bank, like let's say Wells Fargo or Bank of America or Chase. I'm representing a client right now that they are getting a loan through one of those banks and they're paying almost 1% in points. So I wanted to touch base on that because I know you have something to offer as far as some of those costs and kind of managing those costs to the buyer so that they're not so high as
Yeah.
far as points
So
are concerned.
yeah, no, exactly right. So a lot of lenders, what they're doing is that they are offering low rates. I mean, you can see it advertised. I go to the different lender sites and I can see a 6.25 and a 6.3, and
Right.
I'm like, well, how did they get that? I have to go and go through the bottom and the legal, and then I see that they're charging 2 or 3 points. So 2 or 3 points is basically those are percentages off of the loan of the purchase price. So if you've got you know, $600,000 and that you're getting, then you're going to be paying, you know, $12,000 on that, or 30 or $18,000 of that loan amount, you know. So
Right. And that's all just
definitely,
the points. That's not the appraisal, the underwriting.
exactly.
That's not even talking about including your escrow title fee and your home inspection. And that's just one of the
Yep.
costs, right? Mhm.
Yeah, exactly. That's just buying down directly the rate. Now, what we just talked about buying down the rate is using the seller concessions to help you buy that, so you don't have to pay that. But we have these institutions that are, you know, talking to individuals and saying, hey, we got to buy down this rate in order for you to qualify for that, you know. And unfortunately, paying 15 or $18,000, that's a lot of money on top of their down payment and on top of their inspections, closing costs, escrow, title, everything, right? So, you know, when home buyers are out there, definitely shop around, definitely, you know, look around. Yes, you may talk to a big lender, a bank institution, but take a look at mortgage brokers like myself. We're an independent mortgage brokers, wholesale rates. We take a look at the best rate for you. We shop around with different lenders. We don't get paid by sending you to one lender over another. It's illegal to do that. So we actually, you know, just try to get you the best rate possible. It doesn't matter to us. So definitely take a look at your options because you want to make sure that you're making your money go a long ways nowadays.
Right. This is the time where you have to really do your research,
Yes.
prepared, and that's what this workshop is about, is helping you get prepared. And that's one of the reasons why we have Gustavo on the line, because he can provide this information to you. It's free and he's available to do a one-on-one for you if you'd like a private
Yeah.
consultation just to get more information. So we're going to be wrapping it up. Gustavo, do you have any other final words for our first time home buyers?
Yeah, just don't get discouraged, stay focused, if that is your goal, definitely keep talking to a lender, know your options, but don't get discouraged, like we said, it could be very cyclical, up and downs. I mean, in 2 weeks, we could see a little bit lower rate, it's not going to go down to 6, but it could be a little bit slower. So, just stick with it, talk to your lender and know your options.
Okay, good. And if somebody wanted to call you, what's the best phone number for somebody to reach you?
Yeah, definitely. My cell phone, 714-334-4563. Text or call and always answer any questions.
Okay, thank you so much.
Thank
And
you.
if anybody would like to get a hold of me, any real estate questions, whether you're buying or selling, I'm happy to help, and I can be reached at 323-365-9909. Gustavo, thank you so much for joining on the call today, and I look forward to next week.
Yeah, thank you for having me. Thank you.
Thank you.
Thank you
Have a
guys.
have a good week.
You too.
Thanks.